Let's share my screen. Screen 2. Cool. All right. Let me clean this up a little bit. Last week we were looking at the SPY a lot because honestly, I know a lot of people don't want to hear this. I think that we're gonna see the SPY move up a bit, and then I think after that we're gonna be moving down for a slight pullback. The only reason I'm saying that is because of Nvidia. Nvidia had earnings and pulled back, and I think that Nvidia may be declining. I'm not going to say it's going to fall out the sky, but we may see Nvidia pull back. And then for those that don't know anything about Nvidia, Nvidia is the tech company that's been leading the market this year. And so if whatever that stock does, that's what's going to happen to the market. So if Nvidia moves up, market moves up. Nvidia moves back, the market is going to pull back. And right now, the market's trying to figure out what's going on with Nvidia. It's set up to go up, but I still think that Nvidia could be the cause of a slight pullback. But all right, let me clear this up for us. These are some support and resistant lines that I've been placing, and we'll talk about those in a second. Actually, I think this is cool. All right, so, wrong way. All right, so this is TradingView, and we're looking at different indicators. Again, you don't have to use all of these indicators. I don't use all of these indicators every single time. Sometimes I may lean more on one indicator than the other, depending on what style of trade I'm looking at. But I like to give everyone these 5 indicators, the RSI. And again, if you want to know what we're looking at, top left-hand corner is going to tell you. I like to give everyone the RSI, the RVP, the MA ribbon, the MACD, and the stock RSI. All right. We have a question in the chat, but I'll get to it after we quickly go through these indicators, because I think most of us know exactly what these do and how these work. But for my newer people, we'll brush over these. All right. The RSI stands for Relative Strength Index. The RSI is basically telling you if the stock is overbought or oversold. The good thing about this indicator is that you have these simple numbers on the side. And the thing is that if it's down towards 30, so this ranges from 30 to 70. If it's at 30, it is oversold, meaning that there's a lot of people or a lot of investors and traders selling the stock. If it's at 70, that means it is overbought, means that it's a pretty hot stock. It's been going up. People have been buying it up, and it may be ready to sell. So what you want to do when you're looking at this indicator is find a nice spot to get in where the RSI is not too high, but it's not too low for a trade. Because the worst thing that could happen to you on a trade is that you become impatient, right? You jump into a trade, you think that it should go up, and it's not doing anything, or it's going down. It's not moving the way you want it to move, right? So finding a stock where the RSI is favorable, is warm, right? It's right in the middle. That gives you a long runway for it to go up, for you to make money, but then it also gives you some time or it gives you less time for it to make its move. Again, the worst thing that can happen is you jump into a stock, the rest of the market is going up, but then your stock is just staying still. So looking at the RSI, the range that I like to enter in my trades for swing trades is 45 to 55 with the RSI pointing up. You're not going to get that every single time. Sometimes you may find a stock where the RSI is down at 30. Just know that if you jump into a stock where the RSI is down at 30, it may take a while for it to start to warm back up and get back up to 70. I think that a 30 RSI is fine if you're going long on a stock. So this is the SPY. Anytime the SPY pulls all the way back to 30, I mean, that's an easy shoe-in for a swing trade to the upside because it's the SPY. Not saying that the SPY is going to go up 100% of the time, because if you were trading in 2021, 2022, we did have a bear market to where the stock market was going down more often than it was going up. But in most cases, 45, 55 on the RSI pointing up, and you should be good to go. Right now, the SPY is at 62. It is pointing up. So it is hot. It has some momentum, and it's pointing to the upside. So if you wanted to trade a 62 RSI stock, just know that you're running the risk that it could go up a little bit. It's already at 62. It could go up 8 more points to 70, and then it could turn around on you. So if you're trading a high RSI stock, just know that it may just be a quick turnaround on the trade. You may jump in on Monday, and hop out on Friday, or you may jump in on Monday and hop out the next Monday. So you want to keep a close eye on that RSI. And again, this is the RSI on the daily. Now, if you're tracking the RSI on the weekly or the month, it may take a little bit more time for it to actually reach 70. But since you're on the day, it may, it should move at a decent pace. Now, if you go down to lower time frames, if you change this, let's say down to the 4 hour, of course, the RSI is going to be moving quicker the lower you go down throughout the time frames. Do I have any questions on the RSI? Extremely simple. If it's up too high, it's hot, let it cool down. If it's down too low, that's an opportunity for a longer trade. You just may have to look at a few other things when it comes to which way the stock is going. Let me check the chat here. All right, perfect. No questions. All right. Next thing, body of the chart. So let's talk about, let me hide a few things real quick. Let's quickly talk about support and resistance lines. So with support and resistance lines, these are the blue lines that I have charted out. Support and resistance lines are the same exact line. They're just different by definition. So you draw them the same way, right? These lines are going to basically identify your tradable range, where you're going to get in, where you're going to get out, where you're going to set your stop loss, can all be based on where you place these lines. These different lines are going to be placed based on how many touches the stock make at that price point. So if I look here at this line at 529, this line here, we can see that the stock, we have a cluster of touches here, right? So you only need 3 touches to identify a spot to place your line. You can see here we have way more than 3 touches here. The stock was down here at 498. It was climbing. Boom. It hit 529, 530 and started to chop. It gave up, it pulled back, it came back up to test, and then it broke through. On its way back down, tested this line here and tested the line there before moving back up. So still, that's 2 touches here, and we have way more than 3 here. So you only need 3 to go ahead and place your line. Now, and that's for support or resistance. Now, what's the difference between support and resistance? Support is going to be below the current stock price. So the current stock price right now, drag this over. Current stock price right now is 563.68, right? So at 563, this blue line right here at 560 would be considered support because it is underneath the current stock price. Now, if you had resistance, remember we're talking support and resistance. Resistance, we can we'll just put it, since we're almost at all-time highs, we put a line right here at 566, or we'll make it even better to think about. We'll move it down to 565. All right. So the current price is 563. The line below it is support at 560, and the line above it is resistance at 565. So anytime you have a zone or an area where the stock likes to frequent, and you can tell by the candles, you place your line, and then if you're trying to figure out if it's support or resistance, you have to ask yourself, is it below the current price or is it above the current price? If it is above the current price where you place your line, that's going to be resistance. If it is below, that is going to be support. So we have one level of resistance, and then we have multiple levels to the downside of support. You can have multiple levels of each, just depending on where the stock is. Right now, we're looking at the SPY. The SPY is near all-time highs. It's never been this high before locally, and that's why we place this line at 565. So when you're looking at drawing these lines, the whole point, again, is to identify a tradable range. So right now it's at 563. What's the height? The height is about 564 to 565. We can tell because this candle touched briefly, and then it went back down. So the next point for us to break and beat would be around 564, 565 again to the upside. Now to the downside, again, same rule applies. We have a cluster of touches, right? You can see that the stock loved this price point. We have breaks and pullbacks, breaks and pullbacks all along this line at 560. So that means that if this stock comes down $3 to 560 from 563, there's a potential that we can repeat this activity, right? And you can also see here, the first time we broke 560, we had the same thing happen. Green, red, green, red, green, red. Cluster of touches in this area. Again, the other picks that we're going to show you, it'll make more sense. Most of the stocks that we're looking at are not going to be at all-time highs. But since we're dealing with the SPY and it's one of the best stocks, we have to deal with where it's at for right now. But again, resistance is above, support the floor. Do I have any questions on this? It's pretty simple. All righty. Take silence as a thumbs up. All right, let's keep moving. All right. The MA ribbon. The MA ribbon is short for moving average ribbon. Really simple setup. You can make it complex if you want to, but with this setup that I'm showing you is extremely simple. And you even have options on how many moving averages you want to look at. So what is a moving average? A moving average is just the average stock price over any given period of time. You have different types of moving averages that works with how that period of time is calculated into, you know, the price. But to keep it simple, we're using the SMA, which stands for simple moving average. So no extra special calculations or anything of that nature. But we have a 20, 50, 100, 200. So what this means is that we have a simple moving average for 20 candles, 50 candles, 100 candles, 200 candles, right? So that's going to, so basically what this is going to do is you're going to see these lines. They basically chart out what's happening over the last 20, 50, 100, 200 candles. These candles that we're looking at here are being accounted for by days. We're on the 1 day chart. You can see it says 1 day at the top of my screen. So that means that each one of these candles, red or green, represents the price movement for 1 day. So that means that when you look at a SMA, the moving average, this is the average stock price over the last 20 days, 50 days, 100 days, 200 days, because that's what we labeled our candles as, right? So if I move this to the 1 week, each candle represents a 1 week. Each line, each moving average is going to represent a weekly moving average. So that means that if I bring up my MA ribbon again, this is not the 20-day, 50 week, 100 week. I'm sorry, 20-day, 50-day, 100-day, 200-day. Since we moved over to the week, this is the 20-week, 50-week, 100-week, 200-week, so on and so forth. So as you change your different time periods, you go down to the minute, each, whatever unit you go to, the candles are being represented as such. All right. So the simple trick to the simple moving average setup that I have here, and again, there's a lot of different ways you can use it, is that just pay attention to the 20-day moving average in regards or relation to the 50, 100, and 200. So let me back out some. When you have the 20 MA at the top, so basically when you have these in chronological order, when you have 20, 50, 100, and 200 in chronological order, that 20-day moving average is going to act as a bouncing support, right? So if I scrunch my chart up a little bit, you can see that once we have these in chronological order, 20, 50, 100, 200, from least to greatest, you can see what's happening with the candles. The candles are popping up, and then they're again coming back to that average, right? Coming back down to the 20. So the way that we like to trade in the Discord is that if we find a stock that, again, the moving averages are stacked accordingly, 20, 50, 100, 200, and then you see that we have a red candle that's coming in contact with the 20-day moving average, you can give it about 2 or 3 candles and it should be bouncing back off, right? So if we look in this area, try to zoom in. So you look in this area, it happened twice. Came down, 2 red candles to break the 20-day moving average, and you got 1, 2, 3, 4 green candles to bounce us right back above that 20 MA. And then you came up to these red candles here, these 2 red candles. It took us back below 1, 2, 3 to the upside. It took us right back above the 20 MA. And then it happened here. It also happened here. It didn't take as long here. We had 1 touch and go, and this one exploded. It went from 492 all the way up to 504 in about 2 days. Same thing. So what I try to do if I'm looking for easy swing trades is try to find a stock that has 20, 50, 100, 200 stacked in that order. And I have a couple of candles. It's pulling back. It's coming down to that 20. And I would like to enter around where that 20, where it's going below that 20 and can resurface back to the upside. Now, you're not going to always find that. So you may have to get creative as the 20 goes underneath and moves around. But ideally, if you just want an easy layup trade, you don't want to have anything too complex or too crazy to look at. Try your best, find a stock with a simple setup like that. Again, a lot of times it'll be like indexes or ETFs. And I think those make for the easier trades. Now, are you going to be, well, it depends. If you're trading options, that's a whole nother conversation. But if you're buying shares, then you just may want to pay attention to your entries and exits as it bounces along the 20 MA. Now, you do have situations to where the 20 MA is going to dip underneath the 50. Sometimes you may even see the 20 go underneath the 50, 100, and 200, but not too many times for the SPY. So we have the 20, it dipped underneath the 50 here, which breaks our pattern. But then what you want to happen here, once you see an intersection like this happen, 20 goes underneath the 50, you want to have green candles above them both. So you want to wait until you have green candles above the 20 and the 50, even though they're out of order. Because once you have the green candles above both moving averages, what's going to happen is it's going to bend that 20 back up and bring it back up above that 50 to put you right back in the perfect order. So you can see in this area, what would have happened here is, okay, cool, my 20 is going underneath my 50 right here. This would have been a point where I'm like, okay, giving the stock a break. We're just going to wait and see what happens. Again, if you're going long, I'm talking about trading and swing trading. If you're going long, different conversation. But if you're swing trading, you see something like this happen, you may want to back off a little bit to see what the candles are going to give you. Once you see we have some price action and candles above both moving averages, okay, cool. That means that it's going to bring that 20 back up, boom. And once the 20 gets back above the 50, we're back in that order, right? 20, 50, 100, 200. Look at what happens. The 20 is bouncing that red candle off to green, red, green, and is slowly moving itself up before it pops and reaches 545 on this level. Same thing is forming here. 20 just went underneath the 50, waited. Guess what? We got green candles above the 20 and the 50. Same thing that we had here. And if we get this 20 to cross back above this 50, guess what? Same thing, 20, 50, 100, 200, we should be moving to the upside. So that's one little trick that you could use for the moving averages. There's a lot of things that you could do. That's just one of the easiest ones for me to explain when looking at charts. Again, if you're looking for just layup trades, easiest way to that's one of the easiest ways to find them. Let me see if we have any questions in the chat. Any automated scripts that will draw support and resistance lines on the chart? I found, let me see, where is it? What is it called? I found one. I don't think I like it because it was missing some and it was adding some in some weird places. Let me see, support. Where is it at? I don't remember the name of it. I don't remember the exact name of it, but I haven't found any that I like. Ross, if you found some that worked for you, if anyone else in here found some automated scripts that they actually like, you can go ahead and add it to the chat or shoot us a message about it. But automated support and resistance, I haven't found any that I actually like. So I just normally draw mine manually by counting the candles. Good question, though. Next question. When the stock drops, what does the 20 SMA do for you? So the 20 SMA, I like to use it for, I call it the driver. So if the stock is dropping, right, you have to know when to exit the stock and then find another stock, right? Just completely quit the trade until it's ready to be tradable again. So in this instance, where I have my 20 go underneath my 50, make sure I'm answering it right. Yeah, so when I have the stock dropping and if my 20 goes underneath my 50, honestly, I'm staying away from it for a second because I don't know if that 20 is going to continue underneath that 100, especially if I'm not looking at my other indicators. In this scenario, we have the 20 going right back above the 50. In this scenario here, we have the 20 looking like it wants to go back above the 50 here as well. Let me see, what is I think that answers your question. Am I answering the question correct, Derek? You said when the stock drops, what does the 20 SMA do for you? Are you asking like when the stock drops to the average, what happens? Or I'll give you a second to write that in. But I think I answered the question. I guess when do you get out? When do you exit the trade? So yeah, if you're in a trade, let's say, I don't know, you got in back here, right? Say you back in February, the SPY was at 493. It went down, it tested the 20, you hopped in, and it was running up here, right? So if you got in back here at like 493, normally what I would do is I'm using my support and resistance to tell me where to get out at. I wouldn't use my moving averages to tell me where to get out and where to get in, because sometimes they're a little slow unless you're using, unless you're turning them down to where they're extremely volatile and they're fluctuating a lot. So what I like to do is if I take a trade, let's say I hop in the SPY at 493 right here in this area, 493, 492, and then I have resistance right here, right? So if I hop in here and I see the stock starts to stutter at this price point and it can't break through, that's when I check my other indicators. And if I look at my other indicators, let's say I check the MACD and I have a MACD crossover head into the downside, that's telling me that after this period of consolidation and not being able to break this level, that we're probably going to be pulling down before we even have the MACD crossover. I'm sorry, before we have the MA cross underneath the 50. So then that's when I would take profit. I like to take profit close to my resistance or close to my support, depending on if I'm trading shares, calls, calls or puts. So I exit on support resistance, Derek. And I use the 20 as I use the 20 as a guide. So I'm using my indicators in combination to figure out, okay, where should I get in and where should I get out? But I'm not solely relying on one. Can you show how to do shadow options? Northlake, we would have to do that during our option session. Again, we don't have enough time to go over all of that today. But yeah, we could do that during a later option session. All right. Any other questions about the MA ribbon? Cool. All right. VRVP. The VRVP, and where is my data window? All right. So the VRVP stands for Visible Range Volume Profile. This one is extremely easy to use. Blue and yellow are telling you the different types of buys and sells at certain levels, at certain price points, I would say. So we can see that if you look at this area on our chart, we got a cluster of candles, right, at about 545. We got a cluster right here at about 545, and then we have a touch right here at about 545, right? So 545 is telling us that there's a lot of action happening here. And then once we turn on our VRVP, it makes sense. There's a lot of volume sitting right here at about 545. And so the blue and the yellow indicates buys or sells. They call it up or down volume. So looking at this area here, if I hover over this node, these different rectangles are called nodes. If I hover over this node here at 545, again, checking this box, you can see the up is at 49.5 and the down is at 43. The total is 93. So the total is all of the volume. The up is the up volume. The down, of course, is the down volume. So at this level, we have more up than down. So what that means is that if we're at 563, and let's say, I don't know, something bad happens and we come crashing down, at this point in time, based on the data that we have available, if we came crashing down into this level, there's a lot of buys sitting right here that could either stagnate us, make us stop here for a second and trade sideways and consolidate, or we actually could bounce here and move back up to this level. So the VRVP, again, is good at telling you the volume at different price points. I know a lot of people like to use volume that goes across the bottom that gives you the volume for the day. But for me, the way that I trade, that doesn't really help me. Knowing how much volume is happening on a day, I need to know how many buys or sales are happening at price points. So I can know if my stock goes from 540 to 560, what are people waiting to do at 560, right? I don't care about how much volume is happening on a day. Not in my opinion. But yeah, that's the VRVP. Also, the VRVP, since it stands for Visible Range Volume Profile, the more candles that you bring into the window, the more data it's going to give you. So if I scrunch it up like this and you wait, it's going to adjust. If I zoom out some, bring it over, it's going to adjust. So the visible range portion of this is going to tell you from this candle on the far left to this candle on the far right, and it's going to give you the volume profile for those levels. So it's extremely useful, especially if you're into like scalping or day trading. It works well on lower levels. It also works well on swing trades. If you want to know, okay, this stock is going to pull back, where is it going to pull back to? For instance, if you look at the stock is currently at 563. If it pulls back, where do we think that a bounce could happen at? Well, there's a lot of volume right here at 560. We can tell by just eyeballing it. And then you can also look at where we placed our support, and you can see how many candles we have that really didn't decide which way it was going to go. And we have the same thing happening here. So the VRVP is telling you like, hey, you can get out here because guess what? The stock pulls back here. There's a lot of either buys or sells, and hovering over this level, stop it from moving. Hovering over this level now, you can see that they're slightly more up than down. We got 25 up and we have 24 down. So that's why we have a lot of consolidation. No one can really figure out which way it wants to go. It seems like it wants to go up, but if we pull back to this level, who knows? We may just get some more consolidation down below. Now if it moves up, you see if we go up to the level that it's currently sitting on, we have up at 11, we have down at 8. So there's more up volume than down volume that could push us up to our 565 target that we have for resistance. And again, the VRVP may take a little bit more time to deal with for you to figure out how you want to use it, but that's the way that I've come accustomed to using it. Any questions? All right, cool. Let's keep it moving. All right. Let me make sure. Let me reset this chart. Cool. MACD. All right, real simple. This is the MACD. It stands for moving average convergence divergence. The MACD is simply to tell you the trend of the stock. It's not to tell you a price and time. It's to tell you which way the stock is trending, right? So obviously, the stock has been trending up. We've seen it climb, but this is just confirmation. So when you look at the MACD, you have a lot of things happening here. So you have these two lines. You have a red and blue line, and you also have this chart or histogram that's behind the lines. So first, let's just focus on the lines. You have a blue line. I'm sorry. You have a blue line and you have a red line. These two lines identify the type of pressure that's being applied to the stock. So if you have the blue line being dominant, means that it's on top at the furthest right. That means that buying pressure is being applied to the stock. If you have the red line on top of the blue line to the far right, that means that selling pressure is being applied to the stock. Really simple. If you can't tell, let's say you got some scribble scrabble like this happening, check the histogram. The histogram is the chart behind the lines. It represents the same information. It has a little bit more detail, but if it's green, buying pressure. If it's red, selling pressure. So if it's green, buying pressure is being applied. If it's red, selling pressure is being applied. If selling pressure is being applied, the stock is going to want to go down. If buying pressure is being applied, the stock is going to want to go up. Now, if you have it in this faint green color, that means that the upward trend is starting to weaken. And you can see that we had this dark green, means that it was getting stronger and stronger and stronger. And then it started to fade to the green. And you can also see these bars getting shorter and shorter and shorter. Same thing when you're looking at the red. If it's dark red, that means it's intense, it's going down. But then when you see that powder, I guess, pink color, then that means it's getting weaker and weaker and weaker before it flips to the other side. Like we zoom in here, you can see that on the histogram, it was pink bars getting shorter, and then it flips green with some intensity, and then now it's fading green now, right? So there's a lot that this can tell you if you check the histogram. Again, I think sometimes just looking at the lines may be easier, but if you really want to get into the nitty gritty of like how to use the MACD, the histogram is probably going to help you out a little bit more, because just trying to eyeball the line to see if it's actually getting weaker or stronger may not help you. All right, next thing, we have MACD crossover. So again, since this is a trend indicator, you do have times when the trend changes, right? So here, red is on top of blue in this area. Was this back in July? So we had red just dominating. So that means that the stock should be going down. This is, again, a trend indicator. So it's telling you that the trend is down. Eventually, you have blue gather itself and gain some ground, and then you have a MACD crossover right in this area to where blue crosses back over red and becomes the dominant trend. Anytime you have a MACD crossover, it's going to be a nice size candle that's printed that pushes it in one direction or another. So for this situation, we were going down, 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 down. We started to come back up with the buying pressure, and then we had a crossover. So once you see this crossover happen, and a lot of option traders, this is what they wait on. If you're trading options, people love to trade MACD crossovers. That's kind of the leading indicator for them to say, okay, cool, I'm about to experience some volatility with this stock. Let me go ahead and set up my calls or my puts based on what the MACD is going to do on whatever time frame. So again, when the trend changes, we're in a downtrend. To confirm the uptrend, to get us started in the uptrend, you need a nice size candle. It doesn't have to be the biggest candle on the chart, but it's going to be a nice size candle to break you away from that downtrend and continue your journey in the uptrend. Same thing happens for a downtrend up here. You had the MACD cross over to the downside, and once it crossed over here, nice red candle was printed, and then it took us all the way down. So ideally, the way that you want to use the MACD is that if you are in a trade, let's say if you got in a trade before the MACD crossed over to the downside, let's say we bought the SPY at 500 bucks and we had this MACD crossover happen. Boom, it sent us up to about 505, 510, and then we just rolled this trend all the way up to about 550, 560, and then we see that the MACD is starting to weaken. Your goal should be to get out before this MACD crosses over to the downside, because once the MACD crosses over to the downside, that means we're going in a sell trend, right? So for the people back here, where before we started our biggest downtrend, this is our biggest downtrend, even bigger than this one. If you got in back here in May and it went up, you had an opportunity to get out here, and then this one just took you all the way down, right? So again, if you're swing trading, you're just doing some short-term trades, you get in before the MACD crosses over, you actually catch it, you ride the wave up. You want to get out before the MACD crosses over to the downside, unless you're going long on the stock. If you're going long on the stock, then you can buy once the MACD crosses over to the downside. That's another opportunity to buy on the dip. You may have to check, a few references as far as news, earnings, and other indicators. But again, the trend is going to be down. You can buy on the downtrend, wait for the uptrend, and continue your trade. So again, extremely simple, but a really, really helpful tool when looking at what to trade, when to get in, when to get out, along with everything else. Do I have any questions? Cool, let's keep it rolling. Last thing, stochastics. This is the stock RSI. This is your momentum. So if the MACD is telling you the overall trend, the stock RSI is telling you the momentum that the trend can have, regardless of moving to the up or down side. So when looking at the stock RSI, it is similar to a normal RSI based on its range. The normal RSI is going to go from 30 to 70. This ranges from 20 at the bottom to 80 at the top. The special thing about this RSI is that it's extremely sensitive. It's extremely sensitive to price action. So the SPY can go up $5. This may skyrocket. When you look at your normal RSI, it may just be slowly moving, right? Again, this is your momentum indicator. So what you'll notice as well, if I scrunch it up, is that this likes to frequent 0 all the way at the bottom and 100 all the way at the top. Again, it's extremely sensitive. The good thing about this, though, is that once a stock, let's say if you entered in and you bought the stock, the stochastics was at 0, you took it all the way up to 100. Once it hits 100, it is time for a reset. Every time it hits 100, it's going to pull back. It may hit 100 and sit there for a day, maybe 2 days, but then eventually it comes crashing down again, because it has to cool off. It has to reset. So you hit this, pull back at 100. Hit that 100, pull back, hit 100, pull back. We just hit 100 and we're sitting at what, 79 right now. We look back at history, look at how many times it hit 100 and pull back, right? So if you're in the trade, it hits 100, just know that the momentum is going to be slow. and that may also be an opportunity for you to hop out. Now, where does this like to stop at? Where does it like to check in? So the points that the stochastic loves to check in is 0, 20, 50, 80, 100. So you can see right now, the max points are going to be 100 and 0. Of course, it's going to hit those the most. But in between, you need to just pay attention to your 80 line, and you can see that we already had hit 100. We came down, boom, we're sitting around 80, and it's starting to kind of flatline for us, right? So this could be a bounce point for it. It could go to 100, come down to 80, and then go back up to 100, or it can go to 100, blow past 80, go down to 50, come back up to 80, right? So this is where you, again, you can't just solely rely on one indicator, but this indicator, I call it a secondary indicator because a lot of people don't use it. I didn't use it for a while, but when I did start to use it, I'm like, okay, cool. This helps with my option trades. This also helps with my swing trades because I can know, okay, once this is topped out at 100, the stock is gonna lose some steam, gonna lose some momentum, and it needs to gain some ground. So depending on how up I am on the trade, I may be fine with it pulling all the way back down to 0 for me to add, or I may go ahead and just take my profits and run and wait for it to reset. So again, stochastic is your momentum indicator. It likes to frequent 0 and 100 the most, but stop points along the way. You got 80, 50, and 20 that it could bounce at. So keep an eye on that. Do I have any questions about this indicator? Let me check. Hey, all right, we're good. All right, cool. So that is the indicator breakdown. Just wanted to cover these real quick before I pass it off to Mark so he can go ahead and cover the stocks that y'all posted in the chat. Again, if y'all have any questions, just raise your hand or drop a message in the chat for us. All right, here you go, Mark.
Appreciate it. 1 second, share my screen. All right. So I was saying that the first stock was NVIDIA. So let's start with NVIDIA. See what's happening.
Oh, Mark, real quick. I can also I'm going to also cover NVIDIA as well. I have a matter of fact, let me take NVIDIA.
Okay.
I want to do a slight earnings review. But yeah, I'll take NVIDIA. And then the other ones you can. All right, cool. Appreciate it.
All right, so the next one is CrowdSearch Source, excuse me. And by CrowdSource, did you mean CrowdStrike by chance? Assuming you meant CrowdStrike, right? There. Yep. You said it. Yeah, you said it. No worries. So we'll start off with the weekly chart, and then we'll work to the daily chart just to see what's happening. Let's see. Okay. So currently, CrowdStrike is at 277, and it's in between support and resistance. Earlier, we drew support maybe a week or two ago at about 290, or excuse me, resistance at about 290. So that's where our resistance is looking at. And then our support line we drew, it was at about 260. So we're looking at support at about 260. So if CrowdStrike was to break above our resistance at 290, we could be seeing this get to about 320. And if it was to break below our current support, that's sitting at 260. The next place is going to go and try to test. It's sitting at about 230 is where we have it drawn at. Now, looking at the weekly chart, it's looking like CrowdStrike should be trending upwards. As soon as it breaks above this 50-day moving average we have here, our orange line. Once it breaks above this, we should be in that uptrend, and then that uptrend should be taking us to this 20-week moving average, which is currently sitting at about 315. So that's really close to our next resistance area. The indicators are showing that this could happen. We got a regular RSI level is sitting at about 46 and it's pointing upwards. And then we have a really low stochastic RSI level Our stochastic is coming from our oversold region, the zero line, and it's starting to trend up. It's trying to get to that neutral zone and break above that. And then the MACD, while the blue line, our buying pressure is below our red line selling pressure, it is starting to try to flatten out and wants to start to trend upwards. And with that, once we start to have a positive slope on that buying pressure, the blue line, we should start to also see this start continue to trend as well. It looks like what we have drawn here is, it looks like it's trying to make a head and shoulders. And we know that this is basically bullish. So it's going to inverted head and shoulders is bullish. So it's looking to try to, again, break up above that 290. If it can break above that 290, we should be able to see this hit to 320. And that's on the weekly. Now, will that happen this week? Let's take a look and see. We may have some cool down that happens. Because it has been on the weekly chart. If we go back, you see we have like 3 or 4 weeks, or 4 weeks where it's been green. So we could suspect some type of coming. And so looking at the weekly chart, again, the stochastic RSI level, excuse me, the daily chart, the stochastic RSI level is pretty high. It's in that oversold region. It's been trending up there for a while. So I would be just a little bit careful on getting into a trade, especially if you're trying to do a swing trade or a call option when you're bullish on this stock, because that stochastic RSI level is really high. And I know that eventually it needs to cool down. Now, when it cools down, it's not saying that cool down is going to take it all the way down to 230 or 200. That cool down could basically be us trying to come and test this 264 range, right? We're in between two trading ranges. We're in between our 290 and our 260 trading range, and we're almost right in the middle of it. So what I'm just looking to see is if this was to trend downwards, where can I find that good opportunity to get in? And that good opportunity for me would be if it's, if it's pulling down, it's testing this resistance, and it's it's testing support and it's rejecting. If it's rejecting this support, then I will feel comfortable to get into a trade this week, especially if the stochastic RSI level also goes down. If it's going down and it's getting into that oversold region, and we're still testing our 260 support, I'll feel comfortable getting into a trade. And that trade can be, if it rejects that area, you can have your target price at about 280, or if you want it to be a little bit more aggressive, you can have a target price at about 320. But again, that 320 line may take some time for it to hit it. So just be a little bit careful on that. But overall, like this week is looking like CrowdStrike is probably going to be cooling off, maybe consolidation, or maybe pulling back a little bit. We just have to see if it can break underneath this 260 range. If it breaks underneath that 260 range and that stochastic still has room to go down, we're probably going to then see it get to about 230. So that's what I'm looking at on CrowdStrike. Basically just, watching it for the first day just to see how it's moving. Any questions on CrowdStrike? AMD. Take a look at AMD. So AMD. So currently, we can go. So AMD on the weekly, it looks like it's, again, from the stochastic standpoint, is in that neutral zone. It's trying to get back to that overbought region. So it's from the stochastic RSI level, we still have some room that it can go up. The RSI level, it is pointing downwards, is in between our sweet spot of 45 and 50. So that's a good thing. And then the MACD, we have a potential MACD crossover that's getting close to happening, so where this can drive the stock upwards. And we see that our current trading range, again, is testing and support at 156. So if it was to break above that, and then that'll be breaking above this 20-day moving average, the next place is going to try to test is 162. So from 153, excuse me, and if it breaks above that, it's going to be testing 162. If it's rejecting this area, it's going to try to test 144 first, and if it breaks below that, we could be seeing this get to the 130 range. And if we look at it, but overall in the weekly, it looks like this should begin to start to continue to trend upwards. We'll just have to wait a few weeks to see. And then let's look at the daily. So on the daily chart, stochastic RSI level is trying to get back to that oversold region. It's almost there. It's almost to that oversold region. On the daily, I would be, if you're trying to play calls or swing trading, I would be a little bit careful on this one this week, just because we're really close to a MACD crossover to the downside. And the fact that we have that stochastic RSI level, we still have room to hit that zero mark. That could cause us to break below our resistance area we have at 144 and drive us down to this 130 range. And then on this daily chart, again, that 20-day moving average is basically our support line. So if it was to break below that and not reject it, we could definitely be seeing this get to 130. So I would just be a little bit careful trading it this week, especially if you're trying to swing trade it or if you're trying to do calls. So if you're trying to do puts, what I would be doing is I would be waiting for the stock price to break below this 145 range. If it can break below this 145 range and it's showing me that it's staying under there, then I would feel comfortable getting into put options to where I wouldn't have my strike price at the bottom of my support at 130. I would make my strike price somewhere at about 135, 137, somewhere in that range. I would make that my strike price. And then if it goes beneath my strike price, I would just hold on to it longer until I can see if it's going to hit this 130 range. Any questions on AMD? Next one. So up there was okay. Aquastar. Okay. So again, Microsoft is in between one of our support and resistance lines. So current price 416. We have resistance, which is also our 20-week moving average. That's sitting at about 420. And then we have support here at about 406, 407 is our support level. And if it was to break below this support level, it's then going to be coming to try to test our support here at about 395. And if it was to break above our resistance at 422, it'll be trying to get to 435. Just looking at it, it looks like it's trying to find this bottom. This could be coming down to maybe about this 439 area, and then from there we may see the rejection that we need. It looks like from the weekly chart, this could be it's a potential double bottom pattern that's being formed. It could also be a bearish flag, so just that's why you want to be a little bit careful. But this could be a double bottom that we're seeing formed where test here, stock price went up, tested this area, stock price is coming down, and it's coming to try to test this area. Now this also can be a bearish flag where if it breaks below our support level, we could be seeing this trend down even more than just this 370 range. But that'll take time for it to happen, right? What I'll be looking for is if it does break below our current support at 406, when it tests this 396, can it reject this price? If it does reject this price and we see it start to trend upwards, the place that I'm looking to get in is once it breaks back above my resistance. If it breaks above my resistance at 425, I would personally feel comfortable then getting into a trade. And that trade would basically, I wouldn't even worry about this second resistance I drew. But I'll be looking to have my target prices at about 463, but I would bring it down a little bit to have it be about 450, 453 would be my target price, but I'm holding this stock until I see it test the 463, just in case you're doing options because of time decay. But it basically looks like it's making the double bottom. Again, You may see it trend down a little bit first. And if it does trend down, I expect it to test this 430, 397, 96 range, and then reject that price. That's going to be that 20-week moving average. And then from there, if it's rejecting that price, we should start to see this continue to trend up. And that trend up, again, should bring us back up to this 464 range. But before that, it'll have to break to 423. All right, and let's look at the day. Any questions of what I said? I know that may have been a little bit confusing. Check. Check out the day. Okay. Yeah, so daily, we're basically in the middle. We see we're coming from a high on that stochastic to where it was in that overbought region and it's starting to cool down. It broke past, like Adair stated, that 80 range. And now it's testing the neutral zone, the 50 range. And it's looking like it's trying to reject that neutral range. So I would still wait a little bit before I get into this trade, because just because it's testing it does not mean it's not going to try to get back to the zero. So I would just wait a little bit, especially we have that stochastic RSI level pretty low. And then we're really close to a MACD crossover where we got really close and then rejected it. But I would want to see more separation before I feel comfortable getting into a trade, especially because we may see this come back and test our resistance at 423 and then reject and start to trend down again. Just because at 423, you can see the red line. This is going to be my 100-day moving average. And this 100-day moving average is basically going to be treated as resistance. So because the stock price looks like it's trying to trend upwards, you may see it test this 100-day moving average and then reject that price. You can see here, stock price was going up. It tested this 100-day moving average and it rejected the price previously. So we could be seeing that same thing happen. So I would just be a little bit careful. I wouldn't trade once the market opens up tomorrow. I would wait to see what happens and form a decision after that. If we can break above this moving average, this 100-day moving average, if we can break above it and stay above it, then I would feel comfortable getting into a trade, especially a bullish trade, like a call option or a swing trade. I would feel comfortable getting into it. Now, if we was to reject this resistance area, what we're going to basically be going back to on this week, we're first going to be coming back and try to test 412. And we're going to be testing that area because it's a moving average. It's going to be our 20-day moving average, and it'll probably be closer to our 200-day moving average as well. So we're going to be testing that area first. So 412 would be the next place that we can draw our resistance. And I'll just use this one. So we can just actually bring this up a little bit for the daily, and we can say about 412 is going to be our floor, our support level. So if we was to reject resistance at 422, we'll first be going to see this test 412, and if it breaks below that, then we can start to see it try to get back to this 339 range. But that, again, that may take a few weeks for it to get to 339. So just be on the lookout and just pay close attention to it. Any questions? Perfect. So it's Microsoft, AMD, we have M. Technology. All right. So MU on the weekly, you can see that it's currently at $96.24, or about $97. We can see that it's testing our 50-week moving average, and that's going to be huge. Like, can we reject this moving average? If we can reject this moving average, then we're going to be seeing it try to get back to 107. And if it breaks above 107, then we'll be seeing it get to about 118, maybe a little bit lower, maybe at about 115 by that time. But currently we'll say at about 118 will be the next place if it can break above this resistance we have here at 106. Now, if it was to break below this moving average or the support that we're currently at, it's going to come and try to test this 87 range. We can see 87 has been a strong level of support or resistance in the past. We can see here it tested this area recently, and then even if we go back, we can see we have multiple tests in this area right here as well. So that's another strong area of support that we can go and see. So we could be trying to see this get to 86 before we start to see it turn. Now, if it would get to 80, 86, 87 range, then this would be setting up to be what could potentially look as a double bottom once more. So we could be seeing another double bottom forming. And I wouldn't trade this if it was to just reject off of this support line again. Again, if it rejects this, that's perfect for me. I'll pay closer attention to it. But for me to get into a trade, what I'll be looking for is for the stock price to break above the 106 range. So if it can break above the 106 range, that can kind of give me indication that this double bottom will play out, because that's the neckline. If it can break above that neckline area, then I will feel more confident getting into that trade. And then of course I will be looking at those other indicators as well. So at that point, if we're getting close to breaking above that neckline, we should see a stochastic RSI that's pointing upwards. Maybe it's going to be at about 50, maybe 65 range. And then that RSI level should also be pointing upwards as well. And we'll be getting closer to a MACD crossover to the upside. So we would have to where this MACD would be starting, the blue line buying pressure will start to be curving or pointing upwards. It will start to flatten out, or it'll be pointing upwards, getting closer to crossing over our selling pressure, our red line. So just be on the lookout for that. And if we look at the weekly, because we could potentially see this pull back a little bit more, we can see that we have a little bit of room to where it can potentially pull back. Again, the stochastic is low. Again, it hasn't hit that zero mark just yet. And the fact that we're really close to the MACD crossover to the downside, if we was to have that crossover happen, we'll probably be seeing this get to about this $87, $85 range this week. RSI level is also low, and it is testing that 20-day moving average. So if it rejects that 20-day moving average to the downside, we could be seeing this get to, again, 85 and then reject and start to trend upwards from there. That's how I'm looking at Micron. Any questions on Micron technology? TSM. Taiwan Semiconductor. All right, currently prices at about 171. So the next place we can draw support, really tight if we wanted to, and call it about 176. We have a few tests in this area, so around 176 would be next support. Or we can bring it down a little bit more if we wanted to and call it about 175 would be the next support. If it was to break above that, then it will be just trying to come back to its all-time high levels, which is at about 180, 190, 189, 190 will be the all-time high levels. So we could be seeing it get back to that area before it starts to try to break above it or reject it. Now, if it was to reject this support line, or excuse me, resistance line we have at 176, again, it's going to treat those moving averages as support or resistance. So since the stock price is above the moving averages, it's going to treat our current 20-week moving average as support on the week. So at about 162 will be support. We can even see last week it tested our resistance area, and it also tried to test support as well. So this is another strong area of support. Now, if it was to break below this support at 167, where would the next stop be? I don't think it's going to be sitting here at about 130. The next place is going to go and test would be somewhere at about 140. 148, 150 would be the next place that it'll potentially test, just because we see here previously we had some areas to where it treated this as its ceiling, and then also treated it as its floor once it broke above the 7. So once it broke above 147, we see it came back and tried to test this area again, rejected it, trend upwards. Even when it came down here, it tested this area, broke below it, but then went right back above it. So if we was to break below 162, then we could be seeing this get back to about 150. And if we was to see this break above 175, then we could be seeing the stock price get to about 190. So that's what I would be waiting for. Just looking at where the MACD is at and the stochastic RSI level, I will be playing this as if it would be going up, just because while the MACD level is crossed over and it's under there, if we can have that stochastic trend upwards, that could give us the momentum we need to break above this 176 range or 175 range. And if we let's look at the daily to see what's happening on the daily, so we can kind of determine if we'll see that breakout happen or if it'll trend downwards. Okay, so looking at the daily, I will wait to see, because we could be seeing it, just looking at the daily, we could be seeing this get to 162. Really close to a MACD crossover to the downside. We still have room on that stochastic. It's been coming down to get back to that 0 range. And with that momentum, if it's pulling back, then we could be seeing this get to this 162. And it's a strong level of support again, even on the daily, because we have this 100-day moving average that's basically its price as well. So from there, can it reject this area? If it rejects this area and it's consolidating on it, we could be seeing this for the week start to trend upwards to about 174. And it may not take a week for it to happen. It may take 2 weeks for it to get back to 174 if it was to pull back and consolidate on this 162 range. But overall, it looks like it could be pulling back. And if it breaks below this 160 range, then we could be seeing this get back to that 140, 150, 149, 150 range, just because of we have that crossover on the MACD that's about to happen. That could be enough momentum with this stochastic where it's at to break us below that. So just be a little bit careful on Monday. What I'm looking for is, can we break up? Are we going to make it to 160? If we can make it to 160, is it going to reject from this area or not? If it's rejecting this area, could be seeing to get to 175. If it's going to break below it, we're going to be seeing to get to 150. So that's what I'm looking at on Tuesday. I'm just looking to see if it can break below this area before I start to get into a trade. Any questions? So Derek's going to put two. Okay. So Intel current prices at about 22. We have support here at about 25, 24, 25 is our, resistance at about 24, 25 is going to be resistance. We can draw support at the bottom here at about $20. It's currently at $22. What I'll be looking for is, I'll be a little bit careful because this does look like it could be a bearish flag. So just be a little bit careful on that. If it breaks below this $20 range, we could be seeing this get even lower. Now it looks like it's currently rejecting this area. So if it's rejecting this area again, we'll be seeing this get to about 24, 25. And then from there, can it break above this area? If it could break above this 24, 25 area, we're going to probably more than likely be seeing this try to get to about, I won't say the 30 range because we have the 20-week moving average. So we'll be trying to see this get to somewhere about $29, $28 as the current price in the next few weeks. It's setting up to where if you want to hold this for the long term, this may be a good place to go ahead and buy some shares. And then if it pulls back, you can average down your price just because of where that RSI level is at. It's sitting at about 33. And then we also have the stochastic RSI level is really low too. So this could be a good place to determine that this is going to be the bottom. So you can go ahead and start buying shares, especially if you're trying to hold it again for the long term. If you're trying to do a quick trade, you may just want to wait a little bit just to confirm that it is the bottom, because we may see this stock price test this support level a few more times before it starts to trend upwards. It's getting really close. I like where the MACD is at on the weekly. It's starting to curve, starting to flatten out, and it's wanting to start to slope upwards. So with that, if we can see a nice crossover happen where this stochastic is also low, we could be seeing this make a run to that $24 range and break above that and try to get to the $28 range. Let's look at the weekly, see what it's looking like on the weekly. Excuse me, the daily, to see what it's looking like. All right. So on the daily, stochastic RSI level is pretty high. So just be a little bit careful with that. Again, it's in that overbought region. It's almost at 100. It hasn't hit 100 yet, but it's pretty close to 100 to where basically this is running out of room. It's running out of juice right now. So I would just wait for a pullback to happen. Again, that cool down could have us just testing this $20 range. So I would just be waiting for that. So I'll be waiting for this, me personally, a pullback. If it was to go up, I would not feel comfortable getting into this trade just because of what that stochastic RSI level is at. I don't know if it has enough momentum to get us back to the target price of 24. It could have enough momentum, but just for me personally, I would just wait a little bit because I want to trade that I know I have a higher chance of being successful at. This one, we do have that crossover on the MACD, and that RSI level is sloping up, but that stochastic for me is really high. I know it can stay above that, but for me, I just wouldn't feel comfortable getting into it, and I would be waiting for it to cool down. I'm waiting for it, that stochastic to pull back, and then when it pulls back, has the stock price been testing our $20 range? If it has been testing that $20 range and it's rejecting it, then at that point, I will probably start to look for a trade. And I will feel more comfortable getting into that trade just because we also have these moving averages in chronological order going downwards. So we have the 200, 100, 50, and 20-day all in order. And when you see this happen, when it's flipped like this, this is showing us bearish momentum. So because this stock price broke above it, we could be seeing this break. We could be seeing it reject this price and get back below the 20 days. So I would just be a little bit careful. And if the stock price, if you wait and the stock price is testing this $20 range, that's perfect because that's going to also start to flatten out this 20-day moving average, and it's going to start to trend back upwards. So the longer that the stock price is testing this resistance or the support line we have at $20, it's going to cause this moving average to also flatten out and start to point back upwards and have that bullish momentum that you like to see where the stock price is above the 20-day and the 20-day is also pointing up. So for me, Intel, I would just play the waiting game. We just, sit there and wait for it. Any questions on Intel? Let's take a look at MMYT. Okay, so we see that. I know we talked about MMYT a few weeks ago. I think maybe 2 weeks ago. I can't remember if it was last week, but I see that it tested this movement. It tested our support line, or excuse me, resistance that we had here at about 106. And I know I probably said because this was all-time highs. If it was to break above this level, the next place it could potentially see is 105. And if it was to reject this level, we'll be going back to our support. And it looks like this week it tested that resistance level and it rejected it. Looking at this stock, I don't think I will wait a little bit before I get into a buy just because of that RSI level is really high. It's sitting at 67 pointing downwards. The stochastic doesn't know which way it wants to go right now. It looks like it's trying to reject that 80 range and pull back. It could break above it. But because we tested our resistance and rejected it, and we could be seeing this break below our support. So now I'm looking to see, okay, it's about to test support. Is it going to reject support? If it's not going to reject support, then we're going to be seeing this get to $88. So about $88.89. So we could be seeing it get back to this range. It's looking like this will probably happen just because of where this MACD is at. We're really close to a crossover to the downside where the buying pressure will be below the selling pressure. So we could be seeing that happen paired with the high RSI level and the fact that we have the stochastic RSI in the neutral zone. We're not sure which way it's going to go. And then also we have that rejection on that resistance area. We could be seeing this pull back and cool down. So I would just be a little bit careful trying to get into a buy from here. So if I was to have part shares and I'm up on shares, I may be looking to take profits, keeping my maybe your original investment still in just in case it does go out. But as far as the profits that I've made, I'll be looking to take those out. And let's look at the weekly to see what happens. Oh, let's look at the daily to see what we see on the daily. So on the daily, stochastic RSI level is low, but I would just so we could be seeing it start to go up. I would be a little bit careful because of the MACD crossover we just had on the daily. So because we had that crossover happen on the daily, and we still have a little bit more room for that stochastic to go down, we could be seeing this go down as well. And if it was to go down again, it's going to try to break below this $93 range, and then from there on the daily, we may see it come back to about $90 before it starts to try to reject and figure out which way it's going to go. So that's what I'll be looking at for this week. If it's opens up red, can we be breaking below this? Could we be breaking below this $93 range? If it doesn't and rejects it, we could be seeing this get back to 100. Any questions on MMYT? All right, so last one more. So let's look at the weekly. Go from there. All right. So looking at the weekly, again, we can see it's basically at all-time high levels. So this was to continue to go up. We could be seeing this get to about 370, 374, I think that was. Yeah, about 375 would be where we could potentially be seeing this get to. If it breaks above that, again, I like to use $5 increments once we hit the all-time high levels. So if it breaks above that, we could be seeing it get to 380. Now, if it rejects this area, because the price is at about 360 now, the first place is going to come and try to test is here at about 345. We see previously we've had testing in this area. We also had testing in this area as well, to where it treated this as its floor, or excuse me, its resistance ceiling in this aspect of it. So now it could be treating this 345 level as its floor, as its support. And we see the last week it was treating this area as its floor. So if it was to break below this, the next place it can go, and I'm gonna draw it on the 20-week moving average, is at about 320. So if it breaks below 345, we could be seeing it get to about 320. Looking at it, it looks like it's trying to reject this area. We had that MACD crossover that happened, rejected that crossover, and it's pointing back upwards. We have a little bit more room on that stochastic RSI level, and as far as the RSI level, we see we still have a little bit of room left. It's at 62. It's just outside of the sweet spot. Darius talked about the $55 range. It's just outside of that, so we could see it go up a little bit more. But for me personally, again, I would be a little bit careful because of how high that RSI level is. Yes, it can get back higher than that, but how much more momentum does it have, right? We don't know necessarily because once it tests this 375 range, again, that's all the data we have to collect as far as stop losses or target prices that people or buy or entry points that people have set up. After that, we just gotta guess at $5 increments. So I will be a little bit careful. I will be waiting for it to cool down. We may have missed these 3-4 weeks that we had of green. We may have missed this area of opportunity to get in. And I'll be waiting for it to reject, pull back just to see if I can find a more safer spot to get into, just for me personally, especially looking at the weekly. If we look at the daily, we see we're basically in this neutral zone. It's trying to pull back You see, we had a rejection on the MAC. It was getting close to crossing over, and it's starting to look like it's rejecting it. Again, that rejection may cause us to get. You can even draw it a little bit lower at about 362, just because that's where this stock closed. And at that point, this looks like to be could be a bearish flag, bullish flag forming, but then this also could be and it may not get all the way back down to this area, but this could also be a double top. And double top is bearish. So I would just be careful trading. I would be waiting. If it's rejecting this area and it's starting to pull back, if it breaks below this 346 range, then we could be seeing this get back to our 322 range that we had on that weekly. And it's looking like, again, where this RSI level is pretty high on it. And then as the stochastic gets pointing down and we're really close to the MACD crossover to the downside, we could be seeing this cooling. So just be a little bit careful with it. Yeah, I would just be a little bit careful with this trade. So what I'm looking for this week is, can it reject when it tests 367? Is it going to reject this price? If we're seeing rejection, once it hits 346, can it break below that? And if it breaks below that, then I'm just not going to even try to trade it, because I know that we're probably going to be seeing this go down to 21. Now, if it gets to 345 and it's rejecting this price and it's starting to trend upwards, then I'll be looking. You can look for trades to where you can have your target price somewhere at about 367, 365 as your target price for that week. Yeah. All right. Any questions? I'm gonna pass it back. Oh, Ross, I see you put one more in just now. If we have time afterwards, I'll go over this one. But I want to pass it off to Darius because I see we only have like 30 minutes left for him to go over his picks for them. But I'll double back.
All right, cool. I appreciate that, Mark. All right, let's roll right into what I was taking a look at. All right, so I have 4 that we're going to be looking at. Going to be looking at NVIDIA, Meta, Capital One, and First Solar. All right, so let's look at NVIDIA. This has been the talk of the year, pretty much. All right, where am I? Right screen. There we go. All right, cool. All right, so let's take a look at the day for NVIDIA. All right, so looking at NVIDIA, we just had earnings, and they beat earnings. I've been saying this for about a month or so. We knew that they were going to be earnings, but I kept saying that they may be going down from earnings, right? Reason being is because they're starting to try to pull rabbits out of hats, as Ty would say. They're starting to pull these maneuvers that they know will keep the stock inflated and keep people paying attention. As far as stock splits, right? So we had the last earnings. There again, the stock is doing great. The company is doing great, but we did look at as far as like net income, like how much money is NVIDIA actually making to justify the market cap being as such, right? They're not making. So if you look at the other $3 trillion companies, you'll notice, let me grab something from Google really quick. You'll notice something about earnings. Let me see, I forgot the article that Ty and I was looking at. Top 10, give me 1 second. Stocks by, I think we were looking at market cap, right? So if you want to know companies by weight, is that it? Oh, no. Look at our earnings. All right, this is really important. That's why I'm doing some digging to find this real quick. Can I find it? Where is that list? Let's do by net income. Give me 2 seconds, y'all. This is gonna make sense when I can find it. That's not gonna give me the net income. All right, so can't find what I was looking for. There we go. Found it. Perfect. All right, cool. So when looking at NVIDIA, all right, I'm gonna bring this over here, and then we're gonna talk about NVIDIA. Okay, so looking at NVIDIA, right? there's a few things that you want to take into account. So where does the boat stop? Well, I have three things. So currently, NVIDIA is pulling back, which they just had earnings. They're pulling back. We can see that they did have some support right around where we placed it at about 116. And you can see that we have two red candles that kind of bounced off of it after the earnings drop. Again, they beat earnings. Everyone was wondering, well, if they beat earnings, what was going to happen? The thing about it is that NVIDIA may be at the end of its rope. NVIDIA has been going up so much that, think about this. NVIDIA is up over 100% this year. I think it's like 130, 140% right now. Do we think that next year NVIDIA can go up 130, 140% again? No. Do we think NVIDIA is justified at being at the current price that it is, or is it just this high based on trend? So if we look at the earnings, I always say this, if we can just look at the earnings and the revenue, we can see at first when this trend started, we can see that the earnings beat and the revenue beat. We had 19% and 11%. You go to the next earnings, we got 12 and 8. The next earnings, you got 9 and 5. So it's getting smaller and smaller, right? The earnings beat and surprise is getting tighter and tighter. And I even called it on this earnings. I said, this next earnings that we have is probably, if I put it, if I'm a betting man, I can put all of my money on the fact that these numbers should be smaller. They're not going to be in the red. They're going to be earnings, but they should be smaller. I said that before earnings. Earnings came out. Look at what we had. So we had a surprise here at 9%, at 5, almost 6%. The earnings just came out. We had 5% and 4%, right? So it's getting tighter and tighter and tighter, meaning that NVIDIA's ability to outperform is starting to shrink. Like the analysts are starting to catch up to the reality of what NVIDIA is. The next thing is that if we just look at technicals before I start looking at the article that I grabbed from Google that we were looking at, if you look at it now, it looks like, okay, RSI is at 49 on the day and it's pointing up. Not bad. It is coming down and sitting right on top of that 20. So we may get some consolidation right here. And then right above, so you got 118 and 116, we could get some consolidation because between 118, let me zoom in, between 118 and 116, we got support right here. We have support on the blue line. And then we have support also right here at about 118 on that red line. So what we need to see from NVIDIA is NVIDIA to break and hold above 120 again. If it breaks and hold above 120 again, the next target is going to be 122 to 123. And then we're going to get right back up to about 126, 127 to where we had a hard time breaking, right? We sat here for 1, 2, 3, 4, 5, 6, 7, 8 days, almost two business weeks. 10 days is 10 days is 2 business weeks. So we're up here about 8 days, right? And then we had a pullback. So if I continue to look at the technicals, we can see that the MACD is preparing to cross over to the downside, right? This is obviously, in preparation of a MACD crossover. It doesn't mean that it has to happen because, again, if the SPY explodes to the upside, regardless of what the technicals say, some great news from Apple, Microsoft could hold this up and send it back in the opposite direction. Also, you look at the stochastics. Stochastics is dropping, right? And again, stochastics likes to check in around these different bounce points. Can it blow past? Sure. You can see right here, it bounced at 80. So it hit 100, came down, it hit 80, bounced up a little bit, and just went down from earnings, right? So the next place that I'm looking at a bounce could be 20. It hit that 20. We could turn around and then try to make the climb back up to 50, or we can hit 20, sit for a second, and then do a full reset all the way down to 0. Next thing I would look at is let's go one time frame back and one time frame up before we look at the article. So if we go one time frame back, and this is multi-time frame analysis. This is a good way to figure out, if the stock is going up, down, based on the information that you pull from multiple time frames. So we're looking at the 4-hour. Again, RSI is fine. It's pointing up. We look at this, we can see it again, it's still stuck in between those boundaries that we called out earlier. Even if it does pop up this week, if it doesn't break this 127 at a high of a maximum, it could be coming right back down. So to break out of this channel, We need 127 or better. And honestly, we need to break that 130. The reason why we need to break 130 at the highest point so bad is to prove a point that this is not in a total decline, right? So we have a high point at 140. The next high point from a pop is 135. The next high point from this pop is 130, right? So we're dropping in $5 increments from highs. So we're getting lower highs and we're getting lower lows. So you have lower highs, 140 is here, 135 is right there, 130 is here. So the next pop-up, if we can, we need to stop this $5 increment drop from the highs, right? But then if you look at the lows, 118, what's the next low? Down here at 110, 112, and then we dropped all the way to 91, right? So lower lows, lower highs as well, and earnings is starting to shrink. Again, do we think that NVIDIA is going to double next year? Can we see NVIDIA at 250 next year? No, that means right now if NVIDIA is 3 trillion, you're saying that NVIDIA is going to be a $6 trillion company next year. Not realistic. So that means that the gains are going to either table or we're going to see a pullback at some point. Either it's going to consolidate until we get more proof that it's worth its market cap, or consolidation is going to happen. Again, so right now, this whole move from NVIDIA is based on future value that people think that NVIDIA is worth. So again, looking at the 4-hour, we already took care of this. Let's look at the MACD. The MACD, we have a MACD crossover to the downside. Of course, that one's easy. And then if we look at the stochastics, it already hit 0 on the 4-hour. It's trying to come back up. So what we need on the 4-hour, if you're watching the 4-hour or trading it on the 4-hour, we need it to be back in this 20 range. If it just floats around down here below 20, that's still not enough momentum to the upside. We need 20, 50, 80, 100. Right now it's only at 6 on the 4-hour. Now let's move forward. So we already checked the 4-hour, the 1 day. Let's look at the 1 week. We look at the 1 week. It's starting to look like if this doesn't come back up, we could be having this could be a triple top. If you want to count on this one, triple or double top, both are bearish, right? So hit here, came down, hit here, came down, hit here, came down, right? So we need to stay up in this area. And if we do, maybe we can gain some ground and again, take it back to the upside. That's just looking at strictly technical analysis and not factoring in fundamentals. Then we look at this, we can see that the MACD wanted to cross over to the upside and take us up there, but then the earnings pulled us back down. So we may continue to pull back. I know that we have price target upgrades at some crazy levels. 165, 175 is what I was seeing from a lot of analysts, which is like you're saying that NVIDIA is $4 trillion, $5 trillion stock when it on paper shouldn't be. Also, after looking at the MACD against the stochastics on the weekly, is that a fair point? It's at 30. It is above our 20 range. So again, what we want, if we're looking at it to the upside, we want to hit that 50 on the weekly. It'll take some time because this is the weekly, but that's what we're targeting. And then the RSI, the main RSI, is finally cooling off at 59, pointing down. All right. Next thing is NVIDIA going up? That's the next question. Is NVIDIA, everyone's going to ask, after earnings like that, they beat their earnings, fine. But the margin that they beat it by was smaller than all the other previous earnings. Do we think they're going to go up? There's a chance that NVIDIA right now is at 120 or 119. There's a chance that it could pop back up to 125. The reason why I'm saying 125 is because we're going down, again, $5 increments. We're at 140 as a high, 135, 130. We're brought down to 120. If we pop up to 125 and we can't break up to 127, 130, that's also, again, that's just going to be more and more confirmation to tell me that the ship is sinking at some point. Next, let's look at the fundamentals, right? So let's look at what a $3 trillion company or around the $3 trillion company looks like it makes as far as revenue, net income, right? So you look at Apple. Apple has been $2.5 to $3 trillion for a year and a half, 2 years, right? So it's been sitting here, right? It's been proven that it's worth its weight, right? And if we look at revenue, net income, and then we compare it to market cap, the revenue that is generating is almost 400 billion, net income almost 100 billion, market cap 2.75 trillion. These numbers may not make sense right now, but once I show you NVIDIA's in comparison, then it'll start to make sense. You look at Microsoft, another 2.5, well, they're at what, 2.3 now. So another company that has been between $2 and $3 trillion, right? Microsoft at one point was the most valuable company for a while before Apple came back and took it over. So we look at Microsoft, 2.3 trillion. You can see revenue, 200 billion, net income, 73 billion, right? So the two giants, Apple, the two potential 2.5 to $3 trillion companies, you can see Apple, Microsoft, right? Let's skip this and go down to NVIDIA. So NVIDIA, oh, this is old. Let me get the updated one. Hold on. Do I have let me get the updated one. Hold on. Numbers are still reflecting the same. I just want more accurate. Can I get that from? Oh, okay. Yeah, I can't get it from Investopedia. Hold on 2 seconds. I was wondering, I'm like, wait a minute. These companies should be 3 trillion. And they're saying that Microsoft was, I need a up-to-date one. Is this the one? Nope. 2 seconds. That is from August of 20. No, that's not going to work. That's August of 2023. Nope. All right. Can't find the article. Ty, if you get a chance, can you send me the updated article? I don't know why it's not giving me my updated article. But basically what I'm saying is this. So let's go back and look at, we're going to compare these numbers real quick. All right. So this is what a company that's worth the market cap of 3 trillion should look like. If a company is making $3 trillion, so NVIDIA right now, the net income is 10 billion, right? Revenue is 32 billion for this example. NVIDIA, the amount of money that NVIDIA is generating doesn't qualify to be a $3 trillion company. It is a $3 trillion company based on future perceived value. NVIDIA honestly should be between $80 and $90 per share on the high side. The fact that it's at 120 is way too high for a company that's worth, again, 3 trillion. So if you're looking at what the analysts are saying, price targets at 165, 175, you can't go solely off what the analysts are saying. I don't care who it is. If they're telling you that NVIDIA is worth 175, what are they basing it off of? Are they looking at the chart? If you're looking at technical analysis, then yeah, you can say, cool, yeah, NVIDIA could be 200. But again, you're saying that a company that's not making as much as far as revenue, net income, is Apple and Microsoft is worth almost twice those two companies. A lot of people like, okay, we trade NVIDIA. Someone in the chat tell me, other than people who buy gaming PCs, what else do you see NVIDIA make? What else have you seen in real life? What have you bought from NVIDIA? Okay, what have you bought from Microsoft? We all have purchased something from Microsoft. What have you bought from Apple? If you haven't bought anything from Apple, someone you know bought something from Apple, right? I'm just saying, as far as when it comes to valuation with these companies and then price targets, you have to pay attention to a lot of other things. Again, when you're trading trends, right now, we're not even trading reality when it comes to NVIDIA. So you have to be careful on, okay, we know that this is too high. Where do we get off the boat? Same thing happened with Tesla. I always use Tesla as an example. And I'm using NVIDIA right now because NVIDIA is the trend stock. But if you're going to be trading for a while, you're going to be trading for the next, I don't know, 10, 15, 20 years, there's always going to be a Tesla, NVIDIA. And, you know, there's always going to be a new trend stock that's not attached to reality. But eventually, the market, people aren't dumb, right? If I can look at this data and analyze it this way, everybody else is not dumb, right? So when it comes to analysts, you got to kind of look at them with a side eye, because if you sat down with an analyst and said, how did you get this price point? All right. It wouldn't make any sense. Okay. So if we look at Tesla was making a crazy run. And guess what? Tesla had descending highs, right? Boom. Same way. 400. And then it came down into the 380s. and then it came down into the 350s, and we never seen 400. We never seen 380 again, except for on this wick. And then after that, we never really saw 300 again, except for on this wick. So we just have a long line of consolidation. And right now, Tesla is at 214, and Tesla was at 214 back here in December of 2020. Right. So Tesla, if you've been holding Tesla the whole time without taking any profits, you're at the same price point. If you bought it in December, let's say you bought it, I don't know, December 15th, Tesla would be pretty much at the same price. No growth at all. You had opportunities to sell and take profit on a high. But again, if you're holding this stock for long term, at this point in time, you've been holding it for 4 years, you wouldn't see any gains. Right. So when it comes to these trend stocks, you just have to be careful. You can't really listen to analysts. Analysts, they don't have any repercussions for being wrong. They're not going to get sued. No one's going to come lock them up. No one's going to tell them to not rate another stock. They're just going to be wrong, chalk it up, and then rate another stock. So I'm saying that with NVIDIA to say that. Could it go back up? Yes. Could it break this trend that I'm paying attention to? Yes. But what it needs to break the trend that Ladarius is calling, again, you can pay attention to anyone else, that's fine. But for me, and what I believe with this stock and what I've been noticing, we need 127 to 130, and then we can get out of this downtrend. If we can revisit 130 again to the upside, honestly, I would feel even better. If we break up to like 135, okay, cool. You got me. Perfect. But the only reason why I'm so hyped and I'm focusing so long on this stock, because it's attached to the market. The rise of NVIDIA has been carrying the stock market. So that means the drop of NVIDIA is going to be carrying the stock market. So we have to be a little careful. But keep your eyes on this one. Right now it's at 119. It has, if we, again, strictly on technicals, it has a pending MACD crossover to the downside, which is not great. And then we also have the stochastics pointing to the downside. So if you wanted a short swing, you could wait for it to find its ground, come out of consolidation, get some movement to the upside, and watch it on the 4 hour if you want to trade it on the 1 day or 1 week. So we'll be watching this one throughout the week in the Discord. If you have any questions at that point, just let me know. And I'll have the article by that time. I don't know what, I don't even know why Google is recommending an article that's a year old without updated the updated market caps and revenue, because we just looked at it. So I don't know how I got to this one, but we'll figure it out later. All right. Meta. Meta is another one that I've been paying attention to that I actually really like. Meta has been trying to break out of this channel to the upside. You can tell by how many support and resistance lines we've been placing on it. So Meta is trying to break and hold above that 530. I think that Meta, once it breaks above that 530, you can see that it tested it here. Let me zoom in. You see it tested here. It actually broke, but then pulled all the way back, and then it tested it here. So 1, 2, 3 is a test. You can see we put our resistance. And if we can get a break above that, I honestly think that Meta is a $600 stock, in my opinion. Also, it's an election year, so normally social media stocks do well during election years, because where else are they going to tell us that they're pretty much campaigning for whatever they're campaigning for? Let me see. I have some questions in the chat. Consumer products, game cards, business products, AI server chips. Right. So again, Ross, you're right. These are the products that they make. But again, people can't, again, for a company to be a $3 trillion company, you have to dig and search to be able to find a easily identifiable product, is all I'm saying. If you look at all the other stocks, you got Apple and Microsoft. We all have interacted with Apple and Microsoft in one way or another via products. The next one, SMCI, has projected revenue of 28 billion, almost close to NVIDIA at 30 billion. Right. It's getting a little crazy. And if you look at SMCI, they're getting smoked. So yeah, the revenue and the net income doesn't make sense when you're talking about a company that's worth 3 trillion. It's only worth 3 trillion because of its market cap, because of its actual stock price. But on paper, you run the numbers, it's not worth 3 trillion. In my opinion, I think it's worth 1 to 1.5 trillion. Honestly, that's at a median. On a high, maybe 2 trillion, but 3 trillion, beyond 3 trillion is kind of crazy. But okay, back to Meta. So yeah, Meta, nice, really nice setup on the weekly. The RSI was going back up until we ran into that top side rejection on resistance. So we have 59 on the RSI. It's kind of waning and losing some juice on the weekly, but we'll see if we get a pop back to the upside. The reason why I'm saying that is because we have a really nice MACD crossover that's preparing for us on the weekly. We tried to get it here and it rejected. And it looks like we're probably going to go for another one here. If it rejects again, maybe third time's the charm. But again, this is the weekly, so it may take 2, 3, potentially 4 weeks to actually happen. And then historically, September is a crazy month. So just be on the lookout for that. But again, from what we're looking at, this looks nice. Potential MACD crossover to the upside on the weekly. And stochastics is right in the middle, around about 58 out of 100. So not in the middle, a little bit above, but we do have some space to take it up to 100, and we have some space on the RSI to take us up to 70 if we can do that. If not, if we continue to reject, I'm looking at the bottom being around 500. It loves 500 for some point. If it breaks 500, I think another good buy-in point would be around 490. Right now, I can't see us going below 590 unless something cataclysmic happens, like it did 3 weeks ago or whenever that was. But if that doesn't happen and we're just looking at technicals, it looks like 490 may be worst case scenario, but I'm calling 500 as a floor if we get a pullback. So again, I really like Meta. I like the dividend move that they pull, and I think that again, I think that Meta is a $600 stock. All right, next stock. COF, Capital One. I've been talking about this one for a while. I really like it for a rate cut scenario for the market. I like the rate cuts for a lot of the financial stocks, actually. So Capital One, I think Affirm is another one that I talked about before, but Capital One is one I've been paying attention to for a second. And we can see that we got a really nice bounce off of 130. We're back at 146. And this is on the weekly. Again, the weekly may take a second, but it looks like we could be taking this back up. If we can break, honestly, we need to break at about 147. But if we look at this node on the VRVP, this node that we're on the VRVP, we're at 30 up, 18 down as far as buy, sell volume. So if we can take this up to about 150, that would be great. If we get on that 150 node, then it looks like we may get some consolidation or a slight pullback. So we may see a wick like this happen, but we've been watching this one for a while. I think we've been watching this one since it's been chopping at, what is this, 135? Yeah, I think we've been watching it since this area here. But I do think moving forward and in the future that Capital One would be nice. Also, I think Capital One is still working on trying to acquire or take over Discover. If that can happen, that's going to be a real nice move for Capital One. Again, in an environment to where we're receiving a lot of rate cuts, and then credit is easier on consumers. So I think that Capital One is one that I'm paying attention to, again, for more of a longer swing. Also, if you look at that MACD has a pending crossover, and we have a really sharp curve. It's on its way to a pending MACD crossover. So we can actually get that while sitting at 150. We can hit our top level resistance that I have set all the way up here at about 160. So that's one that I've been watching. I've been setting my alerts for. You all can do the same if you're interested. And then if we look at the stochastics, our momentum indicator is right smack dab in the middle, almost at 50 at 48, and we could have 50 more points to the upside. So again, it's a financial stock, so it's not going to move as fast as a technical stock, but I like to add some of these in the mix. I think moving forward, we'll also talk about some dividend stocks as well, because I think dividends play an important role, especially if we ever get into there's been talks about recessions. And if we ever get into a recession-based market, I think we've already been in recession for like the last few years. But if the market realizes we're in a recession, I think that dividend stocks would be a nice place to protect cash from a pullback, especially if you're overexposed to the more feeble and weak sectors that can fluctuate with market volatility. So Capital One is a nice one. Again, really strong on consolidation, hasn't broken below 130 since, what is this, January. So really nice move to the upside, could take us up to about 160. So I'm watching Capital One. All right, last but not least, another one on the weekly is First Solar. So First Solar is a solar power company, is one of the best companies in the solar sector, in my opinion. You can also do some research on what the company is doing. It's American based, and we do have the IRA, I want to say, Inflation Reduction Act, that was helping solar companies. Don't know how what that's gonna look like after November, after we get through with the elections. Depending on who win the election, we could see solar companies either go up or go down, or nothing can happen at all. We don't know. It's a complete toss up because both of the candidates are pretty much saying whatever people want to hear. So you never know. We have candidates that didn't want crypto, that wants crypto, that wanted environmental protections, that don't want them on both sides. It's just, yeah, it's crazy. But I think company-wise, I think First Solar is a great company, and I think that this is an opportunity. There's even an article that talks about rational market offers a buying opportunity for First Solar. This stock was just at about 270. Right now, it's at 227, and it looks great on the weekly. We have 55 on the RSI. We have the fact that we've been bouncing off of support, and we're climbing right above this 20 MA. On the weekly, we have the 20, 50, 100, and 200 all in chronological order. And it looks like if we pop above about that, what is that, 230 to 231, we could start our climb all the way up to about 260. After 260, there's a lot of buys right here. Honestly, I think it's a $300 stock, but the solar sector, for whatever reason, has been getting stumped out, which, again, I still think is a great opportunity for the future. Easy $300 stock. And when do they have earnings? Let me make sure we don't run into. Yep, they just had earnings. Really nice beat, 20% and 7%. It's nice for them. They had a 10% and 10% before. If you want to go look at the earnings, you can. I don't know what happened right here. I think maybe a merger, or they were buying out another. I think they bought another solar company or something right here. But yeah, do your research if you really like the company. But trading wise, again, I think that there's an opportunity to take this up to about 260 to 300 on a swing. You just may have to wait for a second, but we can see MACD is starting to lighten up a little bit. If the MACD lightens up enough, then we can potentially get that MACD crossover. By the time we get the MACD crossover, we may already be at 260, 270. And if we get that crossover, that's an easy shoe in for about 300 to 310. Also, that stochastics, that momentum indicator, is starting to build up. We're at 17. Again, if we can get a lock above 20, the next level I'm looking at is 50, 80, 100. And if we can climb all the way back up again, easy shoe in for 300. So nice stock to swing. You can also do options on it if you want to set the options out, add some time to it, and then also watch your strikes. But I think that First Solar is an opportunity that a lot of people haven't been paying attention to, that could explode while no one is looking and everyone is paying attention to what's going on with the broader market. So any questions? And I think we're a little bit over time at about 8:04. All right, cool. No questions. So what we'll do is, can I take a quick look at a firm? Yep, I can take a look at a firm, and then I will let you all go. If you're interested in joining our Discord, just hang around a little bit afterwards. Can't even type. Just hang around a little bit afterwards. We can show you what the Discord is, how it works, what we have to offer, and then we can have a conversation if you want to join. We also recommend, if you came through Meetup, put a review on Meetup. I don't care what you put. We have over 109. I think we have 110 now, 110 reviews. So we greatly appreciate everybody that posts a review for us. It helps more and more people find us through that platform. And then you can also subscribe to our YouTube channel. All right, Affirm. Let's take it from the day. Oh yeah, nice earnings. 70% beat on earnings is crazy. I think Affirm, again, is going to be a nice one when we start to get into rate cuts. Also, the fact that Apple has backed out of the buy now and pay later space. I guess they're trying to focus more of their money on AI, but I think the buy now and pay later space without Apple in it is going to be great competition wise. And I think Affirm is going to see some pops to the upside. So Affirm right now is at 44. I have a high of Affirm going to 50 to 60 bucks. I've been saying this since Affirm was it 23? I want to say I called that at, but yeah, I think from the earnings that we could see, again, a nice earnings like this, 70% beat on earnings is always nice for a stock. And then we could see some momentum continue to the upside. Honestly, I think with an 82 RSI, stochastics is at the top. I think that we may see some consolidation between 45 and 40 before we make our move to the upside. The reason why I'm saying that as well is because we need this 20 MA, this 20-day moving average, to get back above the 50, back above the 100, and back above the 200. But on its way there, I think that consolidation happens between these levels that we have outlined here. Worst case scenario, we could see it back down sub 40 bucks, but I think anything below 40 is an easy buy for a firm, especially since they've been knocking their earnings out the park. If I scrunch it up, you can see for the last 1, 2, 3, 4, 5, 6 earnings, they've been killing it, and they've been hitting the U-turn. So I think that, again, right now, the high that I see is 50, 60 bucks. But I think with an earnings pop like that we may find some consolidation unless we get a run on the market. Again, if we see the SPY explode, everything is going to go with it, and we could see a firm run right into 50 bucks. And if we look at it on the weekly, we can see, let me reset the chart. Doesn't make it any better because they've dropped so far. We used to trade a firm when it was up in the 150 to 175 range before it came down. But right now we have 68 on the RSI. Again, 70 is hot. It's really hot right now. I would wait. If I'm not already in it, I'm waiting until it cools off. Again, I would like 40, maybe 37.50 would be nice for an entry to take it back up to 45.50. And if you're going to hold long enough, I think that we could even see 60 bucks. Again, it's not going to be I don't think 60 bucks is happening anytime soon. 44 is great for right now, but 60 bucks could be once, we could see that after we start to get these rate cuts, and once they decide on how big the rate cuts are going to be. Ross, does that help with Affirm for you? All right, I guess he's typing. All right, cool. Well, that's all we have for you today. Again, we thank everyone for joining. I'm going to stop. He said, thanks. You're welcome. I'm going to go ahead and stop sharing my screen and stop this recording so it can go ahead and upload itself to the Discord and the YouTube.